In just 12 months, China lost $22 billion in iPhone production to India. Foxconn, Samsung, Micron, all shifting billions in manufacturing south. But Beijing isn't taking this quietly. According to Ray Dalio's research on empire cycles, China's next move could reshape the global economy and maybe trigger the next Cold War. Let's break down how this $22 billion shift is rewriting history.
So let's just start with that number, $22.7 billion. That's the projected value of iPhones made in India for just this fiscal year alone. To put that into perspective, it's a massive jump. This isn't just a small crack in the dam, this is the floodgate bursting open. We're witnessing a seismic shift in who builds the technology we all use every single day.
And look, this isn't just an Apple story. Not at all. It's a systemic migration south. You've got Foxconn pouring in over $3 billion for new facilities. Samsung is dropping another $3.5 billion to expand its factory. And then there's Micron building a nearly $3 billion chip plant. These aren't just line items on a balance sheet. They are massive, strategic bets against China and for India, coming from the biggest names in the game.
And this is where it gets really serious. This quote from Ray Dalio frames the whole situation perfectly. We're not just talking about supply chains and jobs anymore. This is straight-up geopolitics. Dalio's work on the rise and fall of empires shows us that these exact moments, when one power starts to wane and another starts to rise, are historical flashpoints. For Beijing, this isn't just losing some business, it's a direct threat to their global standing.
This explainer is powered by TradingView, your window into global markets, and Audible, where you can listen to the full Changing World Order by Ray Dalio for...
All right, so let's get into Act 1, The Great Exodus. We're going to dig into the hard numbers here because they really paint a picture of just how massive this manufacturing revolution is.
Just look at this chart. I mean, it tells you everything you need to know. It is a stunning, stunning reversal of fortune. On one hand, you have India, where foreign investment in manufacturing shot up by 18%. We're talking over $19 billion. And on the other hand, China. Foreign investment there just cratered. It fell by a record 27%. Big money is fleeing China faster than we've seen in decades. And you know what? It's finding a new home.
So that brings us to the big question, right? Why? Why is this historic shift happening now? Well, this isn't random. The answer lies in some deep, structural cracks that have been forming inside China's economy for years.
Okay, let's break down the pressures building inside China. First, labor costs. The average factory worker in China now makes 2, sometimes 3 times what a worker in India makes. Then you've got a whole generation of young people struggling to find work, with youth unemployment hitting a peak of over 21%. And underneath all of that, a literal mountain of debt. We're talking non-financial debt that's soared to over 300% of their GDP. These aren't just statistics. These are real, painful crises shaking the very foundations of their economy.
But honestly, the biggest problem, the one they really can't fix, is demographic. And the geopolitical strategist Peter Zeihan just nails it with this quote. Thanks to things like the one-child policy, China's workforce is aging and shrinking at a shocking rate. They are literally running out of young people to power their economic engine. This isn't a temporary problem. It's a demographic cliff. And here's the kicker. Once a supply chain leaves, it almost never comes back. So, what's China's play now? Well, let's dive into the 3 likely revenge scenarios.
Okay, scenario 1. This is the most immediate and maybe the most predictable, all-out economic warfare. If China can't win on a level playing field with labor costs and demographics anymore, they're going to use the one tool they have left, the full brute force of the state.
And we're already seeing it happen. They are pumping billions and billions of dollars into their national champion companies. Take the electric vehicle maker BYD. They got over $1.4 billion in government cash just last year. Their top chip maker, SMIC, over $400 million. The strategy here is brutally simple. Use state money to make their products artificially cheap, flood the world market, and basically try to bankrupt the competition.
And again, as Ray Dalio's research reminds us, this is a classic move. We've seen it throughout history. This isn't just cutthroat business. This is often the first step on the road to a much bigger conflict. So I'm curious, which of these scenarios do you think is the most likely? Drop your thoughts in the comments below.
All right, on to scenario 2, weaponizing resources. So if dumping cheap goods on the world doesn't work, China has an even more powerful weapon up its sleeve. They can literally choke off the supply of the raw materials that build our entire modern world. Now, China mines a lot of the world's rare earth minerals, about 70%. But that's not even the scary number. The real number to focus on is this. They refine and process over 90% of them. Think about that. From the phone in your pocket to an advanced fighter jet, nearly every piece of high-tech equipment depends on materials that have to go through China. It gives Beijing an absolutely incredible chokehold on the entire global economy.
And don't think for a second this is just a what-if scenario. They have used this weapon before. Back in 2010, they cut off rare earth exports to Japan during a dispute, and it sent absolute shockwaves through Japan's tech industry. And just this year, they did it again, slapping export bans on 2 other critical minerals needed for semiconductors, gallium and germanium. The threat isn't coming, it's already here.
And that brings us to our third and, frankly, by far the most dangerous scenario. If the economic pressure and the resource games don't work, well, the focus could shift to the ultimate geopolitical flashpoint, Taiwan.
Let this number sink in. 90%. That's it. That is the percentage of the world's most advanced semiconductor chips. We're talking the brains behind AI, supercomputers, everything that are made by just one company in one place, Taiwan's TSMC. It is the single most critical choke point in the entire global economy.
And you better believe Beijing is cranking up the pressure. The military drills they're running around the island have increased dramatically. They're essentially practicing for an invasion in plain sight. At the same time, their defense budget just keeps climbing, jumping another 7.2% this year. You don't have to read between the lines here. The signals couldn't be clearer.
You really have to understand the psychology behind this, and Dalio's principle explains it perfectly. As a power sees its economic strength fading and its window of opportunity closing, it gets more willing to take huge risks. For China, a move on Taiwan could become a desperate, last-ditch gamble to rewrite its future before it's too late.
So, putting it all together, where does this leave us? What's the most likely path forward? And what does it mean for the global economy, for India's rise, and for all of us watching this unfold?
For India, the potential upside here is just staggering. McKinsey thinks its manufacturing sector could be worth over $1 trillion by 2030, creating, get this, maybe 100 million new jobs. But that kind of growth puts a huge target on your back. India is now on the geopolitical front line. It's completely exposed to Chinese retaliation, it's vulnerable to those rare earth cutoffs we talked about, and it's getting pulled deeper and deeper into the Quad security alliance with the US, Japan, and Australia.
So as you're watching events unfold, here are the 3 key signals you need to be looking for. First, keep an eye on the scale and frequency of those Chinese military drills. Are they getting bigger, more aggressive? Second, watch for any news about China stockpiling things like oil and grain. That's a classic warning sign that a country is getting ready for a conflict. And third, watch for any signs of stress in the semiconductor supply chain. These are the tripwires we all need to be watching.
You can track China's currency, rare earth prices, and India's FDI flows live on TradingView. The link is in the description. And if you want to understand China's mindset, get Ray Dalio's Changing World Order. It's the clearest explanation of how empires rise, peak, and decline. You can listen to an Audible with a link below.
And that's really the bottom line here. The cycle is changing right now, right in front of our eyes. China's cycle is shifting. The only question now, how far will they go to reverse it? Subscribe for more breakdowns like this. Next week, the US dollar's replacement theory.